If you Google and look at the white paper on the unit, you see something really very interesting. And that is that it says that the gold and the currency that will be used to make these unit tokens, which will trade over mBridge, which Saudi Arabia is a full participant in, the dollar is not compatible with, will be held within the borders of the countries that possess it, put into escrow accounts, and independently and continuously audited. These countries will not need to send their gold to Beijing. They will not need to send their gold to Moscow. They will not need to send their gold to Dubai. They will hold it themselves. They will have it continuously audited. They will put things into escrow accounts that comprise the unit tokens. And then that unit token will be able to be traded freely amongst one another across mBridge and deliverable upon demand.
Andy Schectman, president and CEO of Miles Franklin Precious Metals Investments, has introduced a new settlement currency called the unit as part of Project mBridge. The unit is backed by 40% gold and 60% by a basket of Brics currencies, aiming to reduce global reliance on the US dollar while emphasizing gold-backed financial stability. By pushing for a currency that integrates gold and diverse Brics currencies, emerging economies aim to alleviate the burdens imposed by the US dollar's dominance as the world's reserve currency. Many of these economies have been forced to carry US dollars to fund America's deficit, often stifling their economic growth. Replacing the dollar with local currencies in international trade is a core objective of Brics, signaling a shift toward a new global financial order. This development could have profound implications for the US dollar. If more countries adopt local currencies for trade, the dollar's demand could sharply decline, leading to deficits in the US economy. Such deficits might trigger hyperinflation, causing the cost of goods and services in the United States to soar, potentially leading to widespread job losses and posing a severe risk to the stock market. Schectman notes that countries are now repatriating their gold reserves, choosing to hold it domestically in independently audited escrow accounts for transparency and control. This trend toward repatriation is part of a broader strategy to enhance economic stability, secure national assets, and maintain financial sovereignty. In an increasingly uncertain global landscape, holding gold domestically reduces the risks associated with foreign financial systems and strengthens a nation's control over its economic resources. By combining the movement toward local currencies with the repatriation of gold, countries are taking significant steps to prepare for a future where the US dollar no longer holds its dominant position. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
The four participants that have stood behind or developed Project mBridge are China, Hong Kong, Thailand, and the United Arab Emirates, backed by the Bank of International Settlements. Oops, sorry about that. Didn't mean to knock that. The same bank that has changed their viewpoint on gold and whether the dynamics have it as a tier one asset or a high quality liquid asset. They look at it very, very, very differently. And so in any case, Saudi Arabia has just become a full participant in Project mBridge, which is a very big development. There's about 25 other countries that are observational in mBridge, and Saudi Arabia, the fifth country, to be a full participant. It's important to note that US dollars are not compatible with mBridge. mBridge will allow countries to trade back and forth their own CBDCs. So if I want to buy something from China, I can send them my digital ruble if I'm in Russia, or my digital rupee if I'm in India, and I can trade back and forth with them over mBridge and not be affected by the SWIFT system. Okay, fine. That's important to note. So that denotes, number one, that each one of these countries will have to maintain a integrity within their monetary system. Take very good care of their own monetary system, not worrying about the conversion into dollars and how all of that works. Just focus on your own ecosystem, the stewardship, if you will, of and maintaining a stable economy within your own ecosystem. But the second part of it, that she said, in principle, we've agreed to the new settlement currency, not a unified currency, but a settlement currency called the unit. And the unit will be backed by 40% gold bars in kilo fashion and 60% a basket of Brics plus currencies with not more than any 30% domination, if you will, in any one currency in that basket. It gets a little bit deeper here, which I'll get to in a second regarding possession and whatnot. But this is a big deal. She says, look, we've agreed in principle to this in our two meetings, and we will have a meeting right now this week, I believe, in China to talk about it with the intention of rolling it out perhaps in the big meeting on the 22nd in Kazan. You're right. One of the things that I find very interesting about the unit ecosystem, um, I will underscore with a simple Google search, which I did recently. All right. So one of the things I wanted to show you regarding the unit and the gold centers around what we've seen recently out of the Bank of England and the New York Fed. Now, it's important to understand that countries kept their gold traditionally in these two locations. You have the Western jurisdiction and the Western rule of law. They would leave their gold at the Bank of England for direct access to the LBMA. They would leave their gold at the New York Fed for direct access to the COMEX. And it's been this way for a very long time. So over the last year and a half, just a simple Google search showed me this. Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia, Hungary, Belgium, Egypt, Senegal, Romania, Nigeria, Poland, Ghana, India, Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, Czechoslovakia, to name a few, and others, have all repatriated their gold from the Bank of England and the New York Fed. India is a good example. In the first 4 months of this year, they bought more gold than they did all of last year, which was a very big year for them. And they repatriated it all, brought it home, along with the 100 metric tons that they've held at the New York Fed. Now, the easy answer, Mario, for that is, well, it's the weaponization of the Western markets, whether it be the euro or the dollar, where we can steal. And steal we did, not sanction. We stole 5 billion in Russian assets.
While China faces its economic challenges, AndySchectman argues that its financial foundation is more stable than many realize. He highlights how China and other emerging economies are strategically absorbing Western assets, providing these nations with a long-term advantage. The decline in dollar-denominated foreign exchange reserves further underscores this shift in global financial power. In 2024, the US dollar's share of global central bank reserves dropped to 58.2%, the lowest level since 1995. This decline reflects a growing trend among Brics nations and other developing countries, increasingly diversifying their reserves. Many of these countries are adding more gold and local currencies to their central bank holdings, reducing reliance on the US dollar. According to the IMF, central banks in these regions are trimming their US dollar reserves and replacing them with non-traditional reserve currencies, such as those from emerging markets. This move is part of a broader strategy to diversify and protect their economies from potential US dollar fluctuations. Gold, in particular, has become an essential alternative as these nations seek to strengthen their financial resilience in a shifting global economic landscape. Schectman sees this as a significant trend where countries like China position themselves to thrive in an evolving world order. Let's get back to the interview.
I think that all governments, regardless of who they are, choose the path of inflation. It's an easier path than one of austerity. It's an easier path because it keeps the masses at bay until it gets to the point of diminishing returns. So, it doesn't surprise me. It's something that I think you'll find over and over and over again in every culture throughout all of time. Same thing is happening here, but in the end, yes, it may not be the best thing for the Chinese economy, but look, I think that this is something that the Chinese economy is one that is maybe have its own set of problems, but the level of asset base that they have, the relationships that they're striking all around the world in natural resources, to me, will allow them to weather the storm far greater than the United States, who is sitting upon a mountain of debt and a diminished asset base. And the majority of the assets that are still in the West are being slowly siphoned away by countries like China. So, yes, it's another piece of the puzzle. But honestly, Mario, it's not one that gets me too concerned ultimately for where China is going, because I think the bottom of their base, the bottom of their financial pyramid, is far more stable than people give credit for. Mario, when the PLA, the People's Liberation Army, accumulates metal, they don't have to tell the IMF. When they're accumulating metal through a proxy bank on behalf of the PBOC, buying directly from the refineries in South Africa or Switzerland, they're not reporting to the IMF. When they're buying gold that is under 995 pure, it's not being reported to the IMF. We saw Saudi Arabia the other day try and hide their acquisition. China has been hiding it all along. They produce between 300 and 500 metric tons a year. We never talk about that. My whole career, everyone always said China's numbers are ridiculous, that they're not, they stayed at around 1,200 tons for years, didn't reflect any of the increase, whether it be in domestic mining production or any import numbers. They want us to believe, just because of a couple of months of them supposedly stopping reporting, which was nonsense because the import-export numbers that were in London painted a different picture. But all I'm simply saying is that I would err on Alistair McLeod's side. You're right, to his point, to your point. He says that they have somewhere in the neighborhood of 40,000 metric tons, 18 to 20 by the people, 18 to 20 plus by the state. And I would agree with that. And I did an interview recently with Sean Kuhn and Dolly Varden Silver, and he had confirmed what I had heard from other mining execs, that China, which is, I don't think a lot of people even know, the second largest producer of silver in the world, are flying around all around Latin America, buying up doré and concentrate. And for folks who don't know what doré is, it's a crudely refined bar that's maybe 60, 70% at best refined. The miners will refine it to that level and then send it into the refining company to further purify it. China's flying around paying an exceedingly high premium to what the West will, buying the concentrate, which is like a sludge, and buying the doré bar at a much higher price in the West, shipping it back to China and having it refined, which again masks the amount that they're buying. It's not purchased off of an exchange. And so they're going to great levels, I think, to accumulate and produce and not tell the world just how much gold that they have. And if you realize that there's a high probability that down the road, gold will be part of a new system, it will be pegged in some degree, whether it be the unit settlement currency or just the very plain fact that the IMF and the BIS look at gold differently than they once did. I think gold has a role in where it's going. It wouldn't be to anyone's advantage to hey, this is how much we really have.
As global economic power shifts, the movement toward local currencies and the growing focus on gold-backed financial systems signal a potential decline in the US dollar's dominance. Emerging economies, particularly Brics nations, are diversifying their reserves, positioning themselves for a future less reliant on the dollar. These changes and the repatriation of gold reserves reflect a broader strategy to strengthen financial independence and stability. Do you believe the rise of gold-backed and local currencies will significantly diminish the US dollar's role in global trade? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.